there's a saying back in the old days, not your keys, not your coins. I think it's maybe time to bring that back. Welcome to the Decent Crypto Podcast. Today is Saturday, November 26th. Happy Thanksgiving, everybody. How you doing, Matt?
I'm feeling thankful.
Thankful that we're still surviving, still on our feet. We haven't been wiped out yet. Still solvent for now. I mean, let's get into it. Another big party here may not be solvent. Barry.
It's Barry's turn.
It's Barry's turn. Yo, I never even thought about that. It actually is Barry's turn now.
Unfortunately for all of us. It was Sam's turn. Now
it was Sam's turn. Oh man. I've been looking up Barry's old tweets. It's actually really funny going back. Like Barry, if anybody doesn't know, we're talking about Barry Silbert, the CEO of Grayscale.
DCG.
CEO of DCG, which is the parent company of Grayscale, and Genesis, both which Grayscale looks like it's okay, but Genesis looks like it may be bankrupt. So yeah, I'm looking up Barry's old tweets. He's got some really good ones. He had one like about a year ago where he's like, "There's just way too much money being washed around the crypto ecosystem, too much debt around too many bad players. This is going to blow up, maybe in some unexpected places." I was like,
there's leverage in unexpected places.
Then he just has one where he's like, "Call me Jamie." It's like, dude, wow, this doesn't look good. It's like, yeah, call me for what? Like a bailout?
Hey, Jamie, you up?
So, okay, Matt, to catch the people up, what exactly happened?
All right, so this all started with Genesis, right? So Genesis,
what does Genesis do?
Largest like prime brokerage lending desk in all of crypto, right? Like the institutional borrow lend market in the like digital asset space, right? Genesis for a long time was facilitating the GBTC trade. So GBTC was trading at a premium to Bitcoin for a while because it was a way for institutions to get exposure to Bitcoin without like having to like open up a Coinbase account or like go through like a centralized exchange, actually custody the Bitcoin, etc.
GBTC is a really complicated product. So normally there are, like closed end funds or open end funds, right? Where like you can, like it kind of tracks to an asset that you can redeem at any time, right? With GBTC, you can't redeem the Bitcoin at any time.
It's a one-way trust, right?
It's a one-way trust. Yeah. So, there are redemption windows, but they're only for like certain investors at certain periods. And there hasn't been a redemption window in quite a while. So it's like a one-way product, and they lock up all their Bitcoin, the amount that people want to, basically purchase GBTC worth of. So yeah, people are hammering this trade, like,
and I mean, it's massive, right? Like, currently there's over 600,000 Bitcoin locked up in this thing. And for a long time, it was trading at a premium, which reflected institutional demand for Bitcoin exposure, outweighing like supply or like the capacity for them to invest in things other than things like products like GBTC, which were like, you can go into your like brokerage account and buy and sell GBTC. Like a popular trade is to buy it in your 401k, right? Because the bet is that someday this thing, either like allows you to redeem the underlying Bitcoin or allows someone to redeem the underlying Bitcoin. And at that point, it should, because of arbitrage opportunities, it should trade in line with Bitcoin, right?
It should be 1-to-1, right? At some point.
Yeah. But for a while, it was trading at a premium. And so a very popular trade was you borrow Bitcoin, right? You convert it to GBTC, you sell your GBTC for the premium, and then you pay back your borrow and like do it all again. Lever it the fuck up, and you're happy. And this was like initially like a very profitable strategy for players like Three Arrows Capital.
Yeah, Three Arrows was the most famous player that was hammering this.
Yeah, and so Genesis, as like the largest source of like borrow availability on Bitcoin, was wrapped up in this because Three Arrows would borrow Bitcoin from Genesis, run the GBTC like redemption or, you know, creation mechanism, pocket the profit and pay back their Bitcoin. The issue is that at a certain point, GBTC started to trade at a discount.
That's so you couldn't
not
do this
great.
trade anymore. Yeah.
Yeah.
Go ahead.
Well, then at that point, like you think, you know, it's really easy to lie to yourself and tell yourself that like, I'm collecting I'm collecting arbitrage here, right? I'm arbing out the spread between GBTC and Bitcoin, and I create GBTC by borrowing Bitcoin and then sell it at a profit. Once that flips to trading at a discount, then you're telling yourself something slightly different, which is that you believe in the convergence of these two assets, right? Like there's no mechanical reason why that should happen, right? Because like
you're basically banking on regulation to come and save you, or some kind of like way to like close that gap, like whether it's like a regulatory, I don't know, like something that gets put in place, or like what other mechanism would there be? Like the market basically says like, you know, this is the only way we can get exposure, right?
Yeah. And I mean, like this became a lot worse when the like futures based Bitcoin ETF came out, BITO. GBTC was down like a large percentage that day, right? Because like now all of a sudden you have an ETF that you can buy and sell, that provides you with Bitcoin exposure, even though it's not spot Bitcoin, it's Bitcoin futures. It's still, you know, like that's better, right? Because you can, like, there is an arbitrage opportunity for market makers to come in, or like qualified participants. I think they call them authorized participants. To come in and like buy and like create and redeem the underlying shares, so that it does trade 1-to-1. So GBTC lately has traded like a little bit of an option on like a binary option almost on whether or not you expect it to be like authorized by the SEC as an actual ETF, as opposed to like this sort of like closed end like holding fund the way that it operates today.
So okay, tying this back though, what does this have to do with Genesis, right? So they are owned by the same parent company, Grayscale, the issuer of GBTC, and then Genesis, the OTC desk prime broker that lends, and, you know, they were lending to basically every major player, right? Like they were, like any kind of new, you know, any big fund, like were they involved in the venture side as well, or no?
DCG was, right? Like their whole approach is to open up these businesses so that you have cash flows to fund venture investments in the crypto space, right? But they sort of keep the underlying businesses sort of siloed, kind of. So
so, you know, Genesis got tied up really. Like, if we want to point to one thing, right? Like, you can kind of look back to Three Arrows Capital as like the reason why Genesis is blowing up. Is that correct?
To a degree. So, you know, they're a large part, right? So first they have this issue with Three Arrows where like Three Arrows is defaulting on their debts, right? Like they don't have enough assets to cover it. They've been like hammering this GBTC trade, and then all of a sudden the GBTC trade doesn't pay off anymore. And what do? They lever up and do it more. And that doesn't make any sense, right? So
they also got in trouble because of the Luna blow up.
Yeah, that was another issue. So
that was the nail in the coffin for them.
Yeah, so they also offer like this like OCC like trading desk, right? Where
Grayscale or Genesis does.
Genesis, yeah, where they'll step in and provide liquidity for like large OTC trades, one of which was the sale of Bitcoin for 1.1 billion of UST back in the day. And there's like some speculation that like maybe they hedged it out, and that's part of what caused the massive deep peg. When you sell like $1 billion, I mean, at its peak, like, you know, UST was still under 20 billion, right? So if you're selling over 5% of the total like circulating supply directly into the market to like hedge out your exposure, maybe that's an issue. And you know, it's unclear, right? But maybe they held on to it too, in which case like they just have like a fair amount of like bad debt, or like
just completely
you know,
worthless.
they've taken direct market exposure on that asset that's like completely worthless. Right. So at any rate, that was somehow Three Arrows was involved there. It's not really clear how, based on all the press releases. It looks like Three Arrows might have facilitated it, or maybe they like took out a loan in Bitcoin and then used the UST as like collateral. But
the other thing I heard with Three Arrows and Genesis specifically was that Genesis was making tons of loans to Three Arrows that was then hammering this Grayscale like GBTC trade. And like, it was kind of this like circle jerk, right? Where like they're like using those profits, like showing that they have a higher balance, taking on more debt, hammering the same exact trade. That's what they were doing for a long time with between Genesis and Grayscale, and kind of going in this like circular pattern and just levering up more and more and more. And then when it starts to unwind, both parties blow up, right?
Yeah. And I mean, they weren't the only ones doing this, but they were definitely like the loudest, right?
Yeah, so, I'm sure a ton of people were doing that.
Yeah. But I mean, I really think, so there's a trade called the Widowmaker. Do you know what this is?
Nope.
This is shorting Tether. It's a term from Meltem Demir's, the Widowmaker trade, because it's like expensive. That. It's like 15% annualized or something to short Tether. And so I think that the GBTC trade is Widowmaker Part 2, where like now instead of like for a while it was just like, you know, borrow Bitcoin, create GBTC, sell it at a premium, right? When it flipped to a discount, it was just like borrow dollars to buy GBTC against your like Bitcoin collateral. And then when the spread widens, you get double wrecked, right? And then all of a sudden you're underwater on your collateral. And this is like facilitated by the fact that like maybe your Genesis's largest client and they actually don't really want to like liquidate you, right? When the value of your assets and liabilities like hits 1-to-1, because they don't want you to go out of business because like they have like cash flow, or they've had cash flows from you like previously. The one other thing that I think kind of put Genesis into a hole here, and this is yet another like, you know, edge in the like spider web graph of DCG, is that they made a direct loan to DCG for like 575 million, which DCG went out and used to buy back stock. So they wanted to like clean up their cap table, like ownership structure. And so they went and bought back a bunch of stock. And so now DCG, I want to say DCG made a loan of 175 million, to Genesis, right? So they took out 575, then they went and made a loan of 175 to Genesis, which is like pretty circle jerky. And initially Genesis was like, hey, like we got hit a little bit. We had a little bit of exposure to Alameda. No big deal though. We're still fine, right? Then it was like, actually, we have like 150, I think, or so million just stuck on FTX as part of our like market making, like OTC trading approach. But that's okay, right? It's not like a huge amount of money relative to like our cash flow. And look, DCG made us a loan to like cover it. So we're good, right? Never mind that loan came from us in the first place. And then the issue became that like, actually it turns out the hole in their like liquidity profile is bigger than expected, and it's unclear whether it's just like a hole or whether it's like a liquidity mismatch, because if they've made loans to people and they're like fixed term loans, maybe they're, you know, they don't need to be repaid for another year or whatever, and so they can't just like force clawback like liquidity, right? But it may just be that like they've made loans against collateral that's dropped below its fair value, and like failed to liquidate it in time. And regardless, like the number that was circulating was something like $1 billion that DCG was looking to raise in order to like plug this hole in their balance sheet. And like to give some notion for just how big this is, right? Genesis wasn't just limited to like institutional borrow lend, right? Like the Genesis lending platform was also like the back end lending platform for a lot of centralized exchange, like borrow lend interfaces. So for example, Gemini, right? Gemini had their Gemini Earn product, and they can no longer honor withdrawals from that.
Yeah, they paused it immediately about 2 weeks ago. Yeah.
Because like Genesis isn't like enabling withdrawals, right? So, you know, they were just using Genesis in the background as like the way to like source yield. This to me is like a screaming like capital market structural issue where you have people that are like lending out at like 6 to 8% and they think it's safe, but in reality they're taking on like counterparty exposure that is akin to lending money directly to a hedge fund, and they're not getting compensated with hedge fund like returns, or at least crypto hedge fund like returns. So you know, it's a pretty big issue. What do you think happens from here?
So this is the big question. I think Genesis goes under, right? I mean, we've already kind of seen most people hint at that. There's already reports that they're looking at Chapter 11. I mean, Genesis is going to go under. Whatever liabilities they have, I don't really know. Like, I guess, that's for the bankruptcy lawyers to figure out like who gets paid back first.
Pennies on the dollar according to their liquidation preference or whatever. Right,
exactly. I think Digital Currency Group, like, I don't think that, you know, if the whole thing files for bankruptcy, I've been saying that that's actually bullish for GBTC holders and Grayscale generally, or like, holders in general, because like then the trust gets liquidated and people get paid back. I have no idea if that's what's going to happen. I think it's hard to say. I mean,
it's tricky, right? Because the trust itself, they can't just like issue according to their like incorporation documents and like filings. Like they can't just like hand you the underlying Bitcoin, right? They have to sell that Bitcoin.
They have to sell it, and then they would
liquidate it for cash,
for sure. And then they would have to return cash, for sure.
Which is an enormous for seller event, right? 600,000 Bitcoin.
It's very it's bearish for the market for sure. That's as many coins as Satoshi has like 1 million coins, right? So that's quite a few coins,
of Satoshi.
So that's, you know, but that would take at least a couple of years. I also don't really see that part happening. I could see the the Genesis piece of it for sure. I think DCG survives. I think Barry survives. Barry has been around for too long to go out right now like this. But I think he's being taken down quite a few pegs, right?
I mean, you know, that's one option, right? Which is like, okay, so first things first. DCG, in order to like declare Chapter 11, would have to basically like, so here's how it would happen. It'd be like a domino effect, right? Of like Genesis declaring Chapter 11 and then trying to like collect on their outstanding liabilities, which includes this $575 million loan to DCG, its parent company, right? You could say 400 million now that like DCG has lent them 175, right? So at that point, right, DCG itself as the owner of Grayscale is actually in a meaningfully good position because Grayscale spits off cash. It spits off quite a bit of cash because they earn 2% or 2.5% in management fees. Obviously that's more during a bull market, but it's still like a pretty promising business, and it's like the one of the only profitable pieces of DCG's portfolio.
Mm-hmm.
So you'd think that as the owner of that they would be able to go out and raise money against it, in order to like cover their outstanding liability to Genesis. And nobody with the capacity of pressing the buttons here, like actually has the incentive to unwind DCG or Grayscale.
Nobody
right?
wants that to happen unless you're a holder of GBTC, right? Like if you're running Grayscale or you're running DCG, if you're Barry Silver, you do not want this to unwind because you're collecting management fees on it. It's just such a money-making machine for you. So
it's
no
like
incentive.
almost zero cost, right? It's very, very little administrative cost to run this thing, and it's like a fair amount of revenue.
Custody costs, that's basically it, right? And apparently it's come out that they're using Coinbase custody
to Coinbase.
So it's a great product for them. There's no reason that they should do that. That's why like they'll live to fight another day, no question. But I could see them basically just letting Genesis go under, right? Like, like let the company just fail or die, like let it go into bankruptcy, or again, we are not lawyers here. I have no idea what happens in this situation. I don't know how you let a company die like this, but
one day at a time.
True. I would say they just sacrifice.
You hire John. What's his name from FTX?
Yeah, exactly. The Enron guy. I guess now the FTX guy will now be known forever as the FTX guy.
He thought he was going to be the Enron guy the rest of his life.
I know, wild. Okay, we'll save the FTX stuff. There's some fun stuff to talk about, but all right. Anything else you want to hit on Grayscale, Genesis, DCG? Kind of a shit show. This is another. If this becomes a forced liquidation event where there's just a ton of more Bitcoin out on the market, it's very annoying. It's gonna cause some panic here. I also think, like, just on the same topic of forced selling, I think there's like within the next 6 months, all of the Mt. Gox coins are going to be distributed out. So that'll be nice. And at some point in the next 6 to 96 months, our staked ETH will unlock. So that's another nice forced selling event. So, it's a good couple years ahead of the crypto winter. So buckle up, as they say.
I mean, I'm not sure that it matters unless you're trying to trade short term. Like,
of course,
we had a really interesting conversation the other day that I thought your take on it was very lucid. Which is, someone was asking you, where do I buy? And you were like, I don't know about where. I think the bigger question is when. Right. Like we are not through the, like, it's a timing issue. Like we have to wait, like, and waiting sucks, especially when you're like a person that's attracted to a market with such high volatility. Part of the reason you're doing that is because you're inherently not a very patient person. Right. Waiting sucks. But it's all we can do. Like, I don't think like if a gazillion Bitcoin come online and start flooding the market, like, I think it pushes price down a little bit. I don't think it like pushes back the start of the next bull run in any meaningful way, though.
Yeah, I agree on that part. But more supply on the market is never like a bullish signal. It's funny
for me.
yeah, true. The funny part about that last point is that Caroline, the former CEO of Alameda Research, came to that exact same conclusion. She has this like old tweet that people are digging up where she's like, and then they realized that the real way to make money was figure out when the market was about to pick up again and just be max long. It's like, well, you know what, dude? Looking back, the most money I've ever made, and like, yeah, like more money than you can imagine, right? It's all because like you just happen to be long at the right time, and things just get out of hand, and they always do get out of hand because human nature is human nature, and it never changes. So, there will be another bull market. I can guarantee that, but just patience.
Yeah, patience.
Okay, let's move on. Another titan of the industry, our main man CZ. First, he's tweeting out FUD about Coinbase. Then he's tweeting out proof of reserves for Binance and a new recovery fund for the industry. This is, what's your take? What do you think? Something, nothing, a whole thing?
Look, I love the on the Coinbase FUD, right? I love the way this went down. He's tweeting something about how he's DYOR'd, right?
It was actually related to the Grayscale situation, where everybody was saying that Grayscale custodies all of their Bitcoin and Ether with Coinbase, and they have 650,000 or whatever amount of Bitcoin on Coinbase custody, and so it's secure. And then CZ tweets out Coinbase only has $600,000 Bitcoin in on their platform
in total.
So, yeah. And then he was like, I'm just tweeting out links. I'm not saying anything here. Yeah, it's pretty funny.
And then of course Base Brian comes in. And he's like, yeah, this is just not true.
Yeah. He was like, hey man, by the way, this is not related to Coinbase custody. We're a public company. You can see all of our you can see our balance sheet in our filings. So
just as a reminder to anyone who's tweeting FUD, you can check anytime you want.
Yeah, that was really funny.
CZ goes in and corrects himself. He's like, my bad, bad, bro.
He's like, hey, I took down the tweet. Per Brian here, you can check yourself. Nice to see. Nice hat tip to CZ there. Base Brian always being based. Did you see Base Brian got a shout out from Vitalik also? He was like,
really?
Hey guys, yeah, because everybody was like, centralized exchanges are not doing enough to, promote the industry, promote decentralization. And then Vitalik was just out of nowhere, he's like, actually, Coinbase and Brian Armstrong are doing a lot with EIP 4184, or which one is it? 4144?
4844, baby.
4844, yeah. And they've been super helpful. I was like, whoa, nice. But yeah. Anyways, CZ, what do you make of this proof of reserves and actually, let's start with the industry recovery fund. What? We've seen a couple exchanges get involved here, right?
Yeah, I mean, this seems to be one of those areas where it's very hard to get good data. So, I've seen announcements that Jump is participating and all sorts of other players are participating. Who knows, right? I don't see a reason why Jump would, of all things, participate in the Binance Industry Recovery Fund, or I think they called it a distressed assets fund. When you can literally just buy it all permissionlessly, right? And determine what you think is distressed and what you think is just going to zero. So, it kind of feels like something else is going on here, right? It feels almost as if this is I'm not sure exactly how the mechanics would work, but it sort of feels like it's something that's meant just like they did with the Binance USD, auto conversion, where when you deposit USDC or USDT to Binance, it automatically converts to BUSD. Ostensibly it was to create more liquid markets so that it wouldn't be fractionalized, so that liquidity wouldn't be fractured across all these different stable pairs, right? But also it's an enormous business case from Binance to just make BUSD broader, right? To increase its distribution and usage and just mind share, right? To me, it almost feels like this has to be something like that, where ostensibly it's an industry recovery fund or a distressed assets fund, but it probably mostly buys BNB or holds Binance USD or raises in Binance USD, and it's more of an optics thing than anything.
Yeah,
I don't think that in crypto there is a single player today that would rather outsource their distressed, that has assets, that would rather outsource their distressed asset purchases to CZ and Binance and Co. over just buying what they think will go up, which could easily just be BNB. What do you think?
Yeah, I mean, this distressed assets fund, I I don't know. It does seem like, also, if you look at it, it says they're just going to commit $1 billion. It doesn't really say much about like where that's going, how it will be used, any of that kind of stuff. So, you know, Binance is now, they're capitalizing on their opportunthey as they should.
Yeah, they posted the other day. They're like, we're hiring.
Yeah, they posted we're hiring. They also posted that they posted a proof of reserves. Do you want to talk about their proof of reserves here?
I don't think I'm as knowledgeable about it as you are.
Okay, yeah. So they posted their proof of reserves, right? So we did a whole deep dive on proof of reserves. We used Kraken as an example of like how they're approaching proof of reserves. They have an independent auditor that goes through, checks, like cryptographically, you can verify yourself that your account is included in their whole, in the audit and in their proof of reserves. But an auditor makes sure that all the wallets are included, all addresses, all actual entries on the ledger, on their internal ledger are included in there. And that's how it's done. Binance, what they did, they basically just posted, a Merkle tree with like all the addresses included. So not audited, nothing like that. The best take I think was Kraken CEO Jesse Powell. He replied to the tweet. He's like, "I'm sorry, but no, this is not proof of reserves. This is either ignorance or intentional misrepresentation. The Merkle tree is just hand-wavy bullshit without an auditor to make sure you didn't include accounts with negative balances. The statement of assets is pointless without liabilities. This is simply, here's a hash of your record in the BTC spreadsheet. Okay, but what's the point? The point of this is to understand whether an exchange has more crypto in its custody than it owes to clients. Putting a hash on a row of IDs is worthless without everything else." And then he just keeps going in. And then he has a thread about like how to actually do proof of reserves. So yeah,
I mean, this is correct, right? All of this is correct.
Yeah, he makes completely great points.
But the thing that he highlights is something that I think a lot of people don't like fully have their heads wrapped around, which is, and we pointed this out in our deep dive, proof of reserves is like comes down to trusting that auditor, right? It's just putting your trust in another party other than just the other than just the trusted third party of the exchange. So what's the point? You know what I mean?
It's no, it's
like,
true.
And then you have the handshake layer, right? Where it's like, okay, like maybe I have some assets on Binance that I've pledged as collateral to like some over-the-counter handshake deal, right? Yeah. Where like I get to borrow USDT against that, and it's just understood that like I'm good for it, bro. Don't worry about it. And in a bull market, that works really well. In a bear market or like a time of like crisis, it works very, very poorly. There's nothing stopping you from rehypothecating, right? Like as long as, and there's nothing stopping people from offering the rehypothecation as long as it, like is the incentive to do it.
Right.
The only thing you can ever know for sure is if you have your assets on a cold wallet or in self-custody of some kind, right? Like that's the only time you can ever know anything for sure. Like, ideally, if you're really trying to make things known for sure, you would download an entire copy of the blockchain, right? And like host your own like full historic like archival node, and verify with like that's the actual proof of reserves. That's the actual fucking Merkle tree.
It's true.
It's true. To know that like all assets actually are accounted for. Yeah. But short of that, like if you're not self-custodying, like you can't feel any better when your exchange posts proof of reserve. Like it's like virtue signaling, right?
Yeah. 1,000,000%. Like self-custody is the only way. It's even self-custody, right? Like if you're not running a node, you're still trusting a node, right? And if you don't know what we're talking about, like, these are things that are really important to understand for like the principles of the actual ownership, right? Like of the digital assets that you're buying, right? It's like self-custody is a very fundamental like idea in all of this. And so it's interesting to explore at each layer, right? If you use a centralized exchange, if you use, even like now we're seeing, if you use something like Metamask, Infura, if you use their node services, like you're putting trust in all these different layers, and you don't really know, like, to the fullest extent, like where that goes, how your data is being used, how your keys are being used. Like, there's a saying back in the old days, not your keys, not your coins. I think it's maybe time to bring that back. As cringy as that is, it might be time.
Yeah.
All right, Matt. Very related note. Metamask.
Metamask, dude. Okay,
this is interesting.
Yeah, so let's take a little bit of a step back and just dissect what happens when you send a transaction on, say, Ethereum. What happens, Karan?
Okay, so let's say I'm sending you some ETH, right? So I will sign a transaction in my wallet that basically says I want to push some ETH out of my wallet into your wallet. I will sign that. I'll broadcast that out from my wallet, which is connected to an Ethereum node, which is basically running, Ethereum, like code, has a copy of the blockchain, and then we'll take my transaction, add it to the pool, verify it, and then add it to the blockchain. I've oversimplified a little bit, but at a very high level, that's what happens.
Yeah. So the part to zoom in on here is that broadcasting step, right? Of where your transaction goes from your local computer, like your signed transaction, to some computer out there running Ethereum code, running an Ethereum client, right? At which point it gets gossiped across the network in the gossip protocol.
Basically just sent to every other node saying that this
communicated
is...
peer-to-peer.
Yeah.
So the thing is, like, in order for your transaction to ever get into that, like, peer-to-peer, like, communication, like, gossip network, you need, like, some kind of entry point, right? And so within MetaMask, within your wallet, you actually do have it specified somewhere, like, which entry point you're going to use, right?
And by entry point, right, the entry point piece, like, if you're not really like an engineer, or you don't work in this kind of stuff, it's not really clear what that means, right? The entry point means anytime you're using a network, right? Ethereum is a network of all these different computers that are running the same software and storing the same data, right? So to enter that network, you need to be running that same software. And for our individual phones, if you use a mobile wallet, or for our individual computers, if you're just running on your browser, it's very computationally intensive to do that, like, live, right? While you're also browsing, while you're also doing all this other stuff. So you outsource that, right? So your computer will just connect to another computer that is running that, and you just send them, you basically send them a signal that says, I want to send this transaction to the blockchain. And so that's kind of where you're connecting to, like, an endpoint, is many times was called. This, we're saying, like, this is the entry point into the blockchain, basically.
It's the entry point into the, like, communication network that all of the Ethereum, like, node operators are running, right? Where they're all communicating with one another. Here are the transactions that I see that are trying to get through. And then what's the latest block? What block number is it? All of that stuff is communicated, like, peer to peer. So it's a little bit like, you have a group of friends and they're all, like, sort of sharing gossip amongst one another. And you have a piece of gossip, but you're not, like, maybe the gossipiest person. So you're not, like, on the up and up about all the gossip, but you have a little piece of gossip that you want to, like, communicate to your group of friends, right? You want to spill the tea, right? You have to tell one of them, right? And then they will tell the rest of the network. And so we would call that the endpoint, right? Like, this is the point in the peer-to-peer network that like that is listening for you to tell it what you want to tell everyone else.
Yeah.
So by default, and so within your wallet, like when you add a new network, like you have to add something called an RPC endpoint URL, right? And that's just what this refers to.
And that basically says this is the one that I want to connect to.
Yeah, when I sign a transaction, this is who I want you to send it to or to tell about first, right? And then like they'll tell everyone else, right? And by default, the RPC endpoint provider for MetaMask is Infura. And so Infura is like the centralized company that operates a whole bunch of these nodes. And as a result, they can handle like incoming like transactions from everybody that wants to like use MetaMask to like sign their transactions and broadcast them to the network. The issue here is that Infura is centralized, and so they can have certain policies. So, for example, when Tornado Cash first got banned back in the day, Infura said, "That's it. We're censoring every transaction because we're a U.S. company." Like, and Tornado Cash has been deemed like sanctioned by OFAC. We're going to censor any transactions that touch the Tornado Cash like contract addresses. And so there was a little bit of like a flurry of like outcry over that, right? Then you had like Infura alternatives like Pocket Network that are trying to like operate like decentralized RPC providers say the same fucking thing. And you're like, bro, I thought you were decentralized. How can you issue a centralized policy?
So right? Pocket Network is doing the same thing?
They're censoring Tornado Cash transactions. And it was like, come on, this is like literally when you're supposed to shine. What are you doing here, guys? Right. Come on. Like they totally fumbled the bag on that one. But they were saying, well, you know, Pocket Network, there's a centralized, like, it's a little bit like Uniswap Labs, Aave Labs, whatever. We're domiciled in the US. We can't have like regulatory, like, issues like shut down the entire network. We need to comply. And so and it's worth remembering that like all of this runs on the internet, which is provided to you by some kind of like centralized like service provider, right? And so like if AT&T detected some packet, if you're using them for your internet and they detect some packets that like they believe are like an Ethereum transaction that's like trying to touch Tornado Cash, if they felt the need to, if they were ordered to, they could probably censor you right then and there, right? So we need better decentralization tools just across the board. But this week, this came back into the news. What happened?
Infura, basically, their privacy policy now states that they're going to start collecting IP addresses for all users. So anytime you're using MetaMask and you're connected to Infura, which is the default, which everybody's connected to, they're going to be collecting your IP address, which, you know, if you look at it, like, this is kind of inevitable at some point, but it does suck to see. You know, you'd prefer to live in a world where they're not collecting your IP address. Now you would also,
what's the danger there?
I mean, it's just like another step where you're not going to be able to transact privately without going through a ton of different steps to kind of obscure your true identity or your, you know, like,
yeah, like I mean, the way that I see the danger here, right, is that like the U.S. government, like, or some government out there, like retroactively, I guess it would have to be U.S. because Infura is based in the U.S. retroactively has some issue with like some contract, and they go to Infura demanding to see the IP addresses for every wallet that has interacted with this contract.
Yeah, I see.
And at that point, you're in danger, right? You know, they could be subpoenaed by like at any time, like probably like without any of us knowing, for this like set of information. And like literally this is why you always have your VPN on. Like it's a huge pain in the ass. It's probably part of the reason why like we have a little bit of latency issues on the podcast sometimes. And like I should totally turn it off for that or get a separate computer or something. But like your VPN should always be on. Right. Just as a best practice, right? We should try to get a VPN to sponsor our show.
Yeah, true.
Now, obviously the VPN provider can also log your shit.
Right.
And so like, you know, DYOR, right? And your mileage will vary, right? But it's better than like whatever government entity going after Infura is like really, really easy to do, right? Like it's a US domiciled company, super centralized, like a huge amount of the like overall like Ethereum transactions that happen on a given day, like come through Infura. And so that's like where they're going to go first.
Yeah.
Right. If they have to like if they go to them and then they find that like your IP address maps to like a known VPN provider, they may not have jurisdiction over that VPN provider to like subpoena them. And so like if you care a lot about privacy, you're probably doing all sorts of other fancy stuff, like operating like a Tor endpoint or something, right? But this is at least like a really easy step to take that like provides you with a lot more privacy than like not using a VPN.
Yeah, no, it's true. I think like, what are the options for people, right? Like, let's say MetaMask starts doing this. Let's say, every major kind of front end, at least, that you're interacting with, right? Like on a smart contract level, you probably can't implement a lot of this stuff. But, on a front end, right? Like if you're using Uniswap or Aave or Compound or whatever, right? Like are they, like what are people to do here, right? Like if you use a ledger, let's say, like is that the best option? You just self custody, use a ledger. But like if you use any kind of, online wallet, hot wallet, like you're kind of just, you don't really have a choice.
Well, if you think about MetaMask, right, it serves two functions, right? The first function is generating transaction data, right? Like generating the thing that gets signed, right? And then you can think of that as like completely, totally separate from the actual signing. And then I guess there's a third function, which is the broadcasting, right? Here we're just talking about broadcasting, right? Which is, and there were a lot of people on Twitter that like tried to say like, oh, don't use Infura, use Alchemy. Well, guess what? Like, guess who else is a centralized entity?
Yeah, I mean,
right?
Alchemy
like,
is no different, right? Yeah.
And I mean, even if it's not in their privacy policy, like people fuck up sometimes. Like, who knows, right? Like, and it's like a pick your poison kind of issue. Like, you shouldn't be like trusting any centralized party to have like your privacy, at heart, right? You should at least like if you're using a VPN, like you need two centralized parties to like fall over for you to lose like privacy, right? And I mean, look, like, obviously like probably the best mapping of like wallet address to human is like the centralized exchange. And if you're using Coinbase, for example, like they're collecting KYC information. And so it's all kind of a moot point. But you'd like to have like as few entities as possible out there with like full total capacity to leak your private information associated with a wallet address. So there are two other parts here though. So there's the signing. Right. And this is so going back, the transaction gets generated. Like you click swap on Uniswap, it generates the transaction. Right. That's like you have sort of like community built wallets like Tallyho.
Okay.
I think is one. I don't know if they're much better. What we really need is like a super high quality open source alternative to Metamask. And if any of our listeners like know of one, I would love to hear about it.
Okay.
Then what you need is a secure like signing approach which is where the hardware wallet or like ledger comes in, right? And so what happens when you connect a ledger to MetaMask is MetaMask generates the transaction, sends just that to your ledger. Your ledger has a secure like enclave, like it's its own chip that all it can do is sign shit, right? It has the private key, but it's not allowed to send that. It's only allowed to take transaction in, sign transaction out.
Okay.
Right. It's like built into the circuitry, right? And so that's why it's much, much safer to use a ledger versus like with MetaMask, the password is getting stored encrypted on disk and the encryption key is like your MetaMask password, right? And you don't really know, like it's not guaranteed that like that's all that can access it, right? That's why that's why the hardware wallet itself is meaningfully more secure. Then you have the wallet layer itself, which is like MetaMask versus Tallyho versus insert your wallet of choice, Wallet Connect, right? So all in all, like it's really easy to create like an open source like alternative to MetaMask that clearly isn't logging your IP address every time you open it up. Like apparently MetaMask is already doing this according to a lot of people. So yet another reason to just keep your VPN on all the time. But what we should have is like an open source like implementation of the Ethereum wallet that like we as a community can audit to make sure that it's not logging your IP address anywhere or any like personal details, right? For the next component, best practice is to use a hardware wallet, right? And like that is generally a solved-ish problem, right? Easy enough. For the third component, for your node, what are your alternatives here? Well, you can use Infura with a VPN on. It's a little better, right? It's probably good enough for, it's good enough for me, right? Like if you really cared though, you would just run an Ethereum node, right? Like this is, it's like computationally intensive or whatever. You can't run it on a mobile phone, but like you could totally run it on like a reasonably powered, like laptop or desktop. Ethereum is designed for this like reason. Like a huge amount of the Ethereum code is heavily optimized for this reason, is that like they wanted it to be something that you can run on a Raspberry Pi or whatever.
And running a node like doesn't require you to be staking, right? Like you don't have to have 32 ETH. You can just run the node. You can just run the software, verify transactions. You won't get paid, but you can still do it. Okay.
Yeah, exactly. It does take a little while to get up and running, right? Like you need to download at least a fair amount of blockchain data in order to get it up and running.
Yeah, this guy Eric Wall on Twitter, he was doing it. This is when ETH was proof of work still, and he was like, week number 3 of me trying to run this Ethereum node. But I
mean, there are like smarter ways of doing it.
You can, like,
there's been a fair amount of like progress. Sorry.
Yeah, no. It's gotten a lot better. So the best way to do it is to run your own node.
And just out of principle, like it's not a bad idea, right? Like imagine a worst case scenario where like Infura like goes out of business or like suffers a cybersecurity incident and like they're down. Right. Like for a little while, Infura was down like several months ago over the summer. And not a lot of people noticed because there was not a lot of people like doing stuff on chain. But it's just good. It's good to know what each of the components within your like supply chain of like clicking swap on Uniswap to like going to like it being visible on Etherscan. It's good to know like what each of the parties along the way is doing and trying to like decentralize as much of it as possible.
No, I mean, I think this is where the future is headed. These kind of like open source compatible pieces of software, but we're nowhere near there. I've said for a long time, like the wallet space is one of the biggest opportunity spaces in crypto. It's not really clear how that's monetized, and that's why the funding has not been there historically. But I think that for this stuff to pick up like that, it just needs to get a lot better.
I wouldn't be surprised if Infura is paying MetaMask to be the default provider.
Well, they're both consensus spokes, so yeah.
They loan 500 million to DCG and then
I gotta say, all this stuff makes me a Bitcoin and ETH maxi. That's for sure.
Quick like shout down. Ava Labs built their own wallet. That's not the kind of like ethos that I get excited about, right? Like I don't think that the people like the centralized entity building the blockchain should also be building a centralized wallet. To me, that's like, look, I understand wanting to like own the value chain and all of that, but I much prefer like a consensus style approach where like consensus is not the Ethereum core developers.
At least Phantom paid a bunch of people, or at least Solana paid a bunch of people to build Phantom Wallet. But to your last point, though, Joseph Lubin, the founder of Consensus, is literally a founder of Ethereum. So I don't know if that point really stands, but their model is different. You know, they pay people they're basically like a venture kind of studio. So okay, let's move on. Rapid fire, and then we'll close it out.
Sounds good.
Wrapped Bitcoin, a lot of WBTC FUD. Matt, what is going on here exactly?
It's so a lot of people are giving the mistaken take that the WBTC is not backed 1-to-1, right? And I want to say the WBTC is a BitGo product, where BitGo custodies all of the underlying Bitcoin, and they issue wrapped Bitcoin 1-to-1, and you can like deposit and redeem as desired, right? There was some like leak that was floating around where it was like showing how Alameda was a large creator of wrapped BTC, and a lot of people took that to mean that like they were custodying the Bitcoin and then issuing the wrapped BTC against it, similar to like Solid wrapped BTC, which actually should be at 0. I think it is trading at 0.
Pretty close
like
to 0
that was
now.
like imagine if instead of BitGo, FTX was the one custodying it. All of a sudden it's 0, right? That's not the WBTC model, but it did like start to depeg a little bit, and it was trading at like 1 or 2% down last I saw. And I saw a lot of people on Twitter saying like, I know this is safe, but I'm going to get out of the position anyway. Right. It's just like after FTX goes under, like you have no idea. You have no idea like who you can trust anymore. And it's just
people are just scared.
Not even think about it.
Yeah. People are just shouting anything. People are like, get your money off every exchange. I mean, I get the sentiment. I do get the sentiment where it's like, in some way, it's like, you know what? People should be self-custodying. Like, if this makes people move towards self-custody, like, as someone that works at a centralized exchange, like, self-custody is definitely the move. Like, so if this gets people to self-custody,
I mean, the exchange is for exchanging, right? Not for custody.
Yeah.
Right?
Yeah. I think the Kraken CEO, again, Jesse Powell had the best take on this. He was like, I mean, you already said this, but it's like, yeah, like storing customer funds is a massive liability for us. Like, we hate doing it. We don't want to do it. It doesn't generate any revenue for us. Like, it's not something we want to do. So, yeah, I mean, like, this wrapped Bitcoin FUD, it's really stupid. The wrapped ETH FUD, like, really stupid. I know you enjoyed this a lot. Like, people were saying, like, wrapped ETH is not solvent. For the people out there, wrapped ETH is a ERC20 token. There's no like foundation that mints new wrapped ETH. You have to exchange it, right? You have to basically exchange ETH for the ERC20 version of ETH, which is wrapped ETH.
And this exists because a lot of contracts can't accept ETH as an asset because it's not ERC20.
Yeah, a lot of contracts only like operate with ERC20 contracts. So you need an ERC20 version of the native token, which is ETH. This was really, really stupid. Yeah, I don't know where people come up with this shit.
I mean, like the wrapped ETH contract is like less than 50 lines of code. Like you can actually read it yourself. It like your ETH is not custodied. It's like you're like you're wrapping and unwrapping ETH. It's like it's so straightforward. But you know, my hot take on this is that like, why haven't we seen, instead of wrapped ETH, like for example, like on like OpenSea, right? If you're like placing bids with wrapped ETH, why wouldn't you just place that same bid with Lido staked ETH, right? Or like Coinbase staked ETH, like the liquid staked ETH, or like Aave ETH, right? Which is like a proxy on that, because people, you know, to the degree that Aave is earning less interest, people will borrow it to wrap it and stake it, right?
Yeah.
Like liquid staked ETH actually should be the kind of ETH that we're all operating under day to day, right? Because it makes like the network more secure, because you have like all of this ETH like actually staked. And then if you're like placing a bid on a collection on OpenSea that you think might get filled in a week, a month, who knows, then at least you want it like sitting there earning some interest, right?
Yeah.
So my hot take is that like, yeah, liquid staked ETH is like wrapped ETH, but better. It just earns interest.
Huh. Yeah, I mean, it makes sense. Yeah, I guess like where are the big like risks there, right? Like you don't really
in the
have.
staking provider, right?
Yeah, exactly. So you
That's the
have
risk.
it's either Lido or
You know,
Coinbase.
if I were Lido, I would be on an enormous marketing push to try to make Lido staked ETH the go-to the go-to token for all of your like ERC20 like ETH based needs, right? I would be like partnering with OpenSea. I would be partnering with Aave, or you know who like literally whoever, right? I think that the because this is one of those things where it's a social consensus as to like which asset is going to be the most liquid. It's just like stable coins, right? Where like USDC ETH is more liquid than USDT ETH, right? It's more liquid than DAI ETH. And so if you can reach that level of being the like de facto standard ERC20 like tokenized ETH representation, then you captured all the market share, and like
Yeah,
that's what
true.
people are going to use going forward.
Mm-hmm.
Yeah, that's my hot take.
Yeah, there should be a big kind of battle between all those parties that have like a ERC20 ETH.
Yeah.
Okay. Well, speaking of ETH, what is this Shanghai fork? What's going on here? Is there anything really worth noting?
Yeah, so this past week we had, I want to say it was our first all core devs call since the merge, or it might have been like the second. I think it was the first though. And the thing that we're discussing is what's going to be included in the next hard fork, the Shanghai fork, right? So there's a whole bunch of VIPs, some of which are interesting, some of which are not. There's two I think that like are bigger than others. So the first one is withdrawals, like being able to withdraw your staked ETH unstaking, right? Implementing that unstaking queue. I think it's pretty much agreed across the board that like that's necessary. Otherwise it's like a huge rug pull, right?
Yeah. People
because
are going to be
they've been saying
pissed
forever.
Yeah.
Now, I find this really interesting because with the advent of liquid staking derivatives and especially Coinbase ETH, like a huge quantity of ETH that people had staked already is liquid to a degree, to plus or minus, like I think the discount now is like less than 3%. And so if you like really wanted that liquidity, you know, your opportunity cost is pretty high. Say you want to sell your ETH to dollars and like buy treasuries, right? Like your opportunity cost is like over 3%, right? If you're in that scenario, you've probably already done it, or you've at least like entered into like, maybe if you self-staked, like you've entered into some offline like handshake agreement, where you've already sold it OTC. To me, this is a bullish catalyst, because it enables people like institutions, for example, like it's really hard to underwrite the risk that like withdrawals don't get enabled, right? Because it's existential, right? And so even if there's a 1% chance of down 100%, that weighs very heavily on your like probability weighted like outcomes of like making of like staking your ETH, right? So the ability to like it's a little bit like GBTC, right? Where like as soon as the underlying Bitcoin becomes like withdrawable, it completely changes the like economics of the entire system. And so for me, this is that, right? And I think it's very bullish because it's really hard to underwrite what are the risks that like GBTC never becomes like redeemable, right? But once it is, then you know what you're dealing with, right? And so like, I think there's a fair amount of money, like, ready to come online that,
once this is figured out.
Yeah, then it's like a known, it's a known, known, right? It's no longer an unknown unknown.
Interesting.
And, to me, it feels very, very bullish. I also think that like, if you staked your ETH like a couple of years ago when the Beacon chain came out, you don't really care, right? Like you're clearly like, you care a lot about this stuff long term. You don't really care about, like you're not trying to get liquidity now on this thing that you believed in so much that you were like early to like staking on the Beacon chain before the merge even happened. So that's my thought there.
Okay.
There's one more, which is EIP 4844.
Yeah.
This is going to create a separate fee market for something called call data, which is like the way that layer 2s post down their transaction data directly to the L1. And that's what enables rollups. Currently rollups are competing in the same fee market as layer 1 transactions. And the goal here is to break that out into its own like separate marketplace.
Okay. I see.
There's a lot of people that talk about like, how is the value capture going to break down between L2s and L1s? I don't think either of us really cares to talk about that, because who the fuck knows, right? Like this is always my response is like, and it'll be funny. I'll be in a meeting, and at the end of the meeting, someone's like, what do you think like we can model like the value capture of like L2s versus L1s as, like, if we're trying to like underwrite like that value capture thing? And I'm like, bro, just buy the coins. Like they're cheap now. Buy good coins at the bottom and then sell them at the top. Like who the fuck knows? Like, seriously. But I think the other thing to remember on 4844 is a lot of people see this as an existential risk to Ethereum's capacity to like collect transaction fees or whatever. They think that like the value accrual is going to go to the L2.
Okay.
And because EIP 4844 makes it cheaper to post down to the L1, it effectively inherits that security at a discount. Like, I think a lot of people forget that like this is like a social consensus, and we can undo it, redo it, alter the parameters, change whatever the fuck, right? This is not like set in stone here. Like, you know, you buy Bitcoin because it's literally stone, right? It's bedrock, right?
Yeah.
You know what it is, and it doesn't change. Ethereum, like, lots of things change, and a lot of times they're good. And so, you know, we always have the capacity to like change back. So yeah, just flagging, you know, rollups are about to get a fair amount cheaper. I don't think that's the thing that stops you from interacting with rollups today, but, you know, in the future, maybe.
Yeah. No, I think it's an interesting implementation too, because it leads to, I don't know, it's just like, it's separating out the fee market. It signals that all of these things, you know, eventually, ideally, they will have a lot more activity. They will have a lot more, like transactions that need to settle onto the main layer. And like planning for this stuff. This is the kind of stuff that happens in the bear market that leads to the next bull market, you know? And so it's really nice to see that these things are getting built. They're, you know, I'm very proud that Coinbase is helping out. So good to see. Base Brian. Okay. You know, I think we should just leave it there on some nice positive news. We're going to talk about some things that angered us
it's
around.
Too funny.
Okay, fine.
It's too
fuck
funny.
it. Let's start. I was going to say, you know, fuck that asshole. We're not going to talk about SBF. But,
bonus segment, baby.
Bonus segment. The reason I actually want to talk about it is somebody sent me this tweet. Apparently, BitBoy is in the Bahamas right now. He just flew there, and he's outside of SBF's penthouse, and he's live tweeting from the penthouse. He's like posting videos outside SBF's compound. He just posted a photo with his car. He's like, apparently this is SBF's Toyota Corolla. I'm not leaving the island until I have answers. So who knew that the scammer from the last cycle is now the number one journalist in all of crypto?
Coming to you live.
We
should do a special episode from the Bahamas.
We should just show up. We should just ask Sam what's going on. Hey brother, you want to come on the podcast? First guest ever.
Maybe his internet's down, you know, like he can't afford the like internet bill, and like that's why we don't have answers.
That's why we
can just go in person. Hey man, what's up? We get there. He's like, I'm trying hard. I'm trying to yield farm. I gotta pay back.
Okay, wait. What do you want to talk about?
Look, I have only one thing to say here, which is that I think we obviously should have taken a bunch of money from SBF, right? And then we too could be publishing fluff pieces. Come on. Like, this is like probably the most like profitable thing journalists have come up with in the last 2 years, right? Like, why didn't we take money?
He's probably the reason the New York Times will be alive for the next 20 years, you know? It's like, where else were they going to make money from? It's like just SBF
and Wordle
paying for fluff pieces. He's probably paying for Wordle.
Yeah, imagine every word on Wordle is just like FTX US or like solvent.
Yeah, the media is fucked. Not much else to say.
Yeah. Not us though. We keep it decent.
Yeah, we keep it decent. All right, this has been a decent recap for November 26th. We'll be back with another deep dive this coming Tuesday. Have a good weekend, everybody. Till then, stay decent.
None of this was financial advice, legal advice, investment advice, or any other kind of advice. If you're looking for advice, you are definitely in the wrong place. Until next time, stay decent.